Hi, welcome to the Resources Roadhouse. I'm Wally Graham. I'm with Andrew Radonjic. He's Managing Director of Venture Minerals. Now, Andrew, back in February it was, at the Explorers Conference in Fremantle, we spoke to you then about the possibility of the Riley iron ore mine coming back on stream, and just last week you've announced an offtake deal for Riley.
Yeah, that's correct. Yeah, thanks, Wally, for this opportunity again to talk. But it's been a pretty busy couple of months, and securing the offtake was by far the key thing to get done. Now people have got some if you like, more certainty that the project's going to happen. So that was a great result for us.
Yeah. So, well, in a nutshell, the offtake deal. What does it entail, and what does it mean?
Well, we signed an offtake with a large group that has been trading 140 million tonnes in 2018, so that's very important for us. So that sort of security, they trade a lot of FMG product, which is very similar to the product we have. So it's a first step towards us getting the project ready. Now we need to do is update the numbers on the feasibility over the next, say, around about 4 to 6 weeks, and then we get a decision to recommence mining in June. Today the project is making something like $47 million, Riley is. So we got to, obviously we'll construct the plant itself. We've got 90% of the equipment. We'll build that and start the first shipment, say, October, November this year. And that'll take a couple of years. But the idea really is that whatever money we can make out of the project is that we can maybe do a bit of hedging, and maybe even if we get 20, 30, even if we're really lucky, 40 million. And we'll put that towards the new, smaller, higher grade version of Mount Lindsay, and those numbers are going to be coming out in the next few weeks. Yeah,
and I suppose the important thing to sort of really take from that is that, all right, so any of those numbers, 20, 30, 40 million, that's 20, 30, 40 million that you don't have to go back to the market and rattle the tinfoil.
Absolutely. So the idea is really to build Mount Lindsay from cash flow we generated. So we're going to organically grow the business, and we don't have to. We'll be self-funded. Once the ships start rolling out, and the money comes in. So it'll probably cost us $5 million. We think. The study will tell us, but say $5 million to get those last bits of equipment, and get the mine up and running, get the steel work, all the concrete, all that sort of stuff you need, and then the mine first shipment, process and delivery to the port before you get your letter of credit.
Right.
So up to that point, so it's kind of like a cash operating and capital cost mixture. But we get that money in, then the money, the $47 million figure I spoke about before, or 20 or 30, whatever it ends up being, that'll be net profit. That'll be profit. But if that does say we've got a $50 million capex, and we've got say half of it done already, the rest will be all debt. So no more dilution for shareholders. That's the idea.
Nice. And so what was sort of market reaction to the announcement last week?
Oh, look, very, very positive. We went up, I think, 35%.
Oh, wow.
Yeah. So and it's moved back up a little bit. Even though market's reasonably tough, and obviously there's a lot of things happening overseas. The Vale continue to have difficulties in restarting their projects, and they've probably lost their social license. So, hopefully they get back on track, but not for another couple of years. Obviously, that's all good for you. I mean, you're setting a bit of a new trend there. Releasing a good announcement and actually getting traction out of it. Most guys, when these days, you put out a good announcement, and the first thing that happens to your share price, it gets sold down. But that's a good reaction. Look, I think the near production play. We got the capital. Market cap's 14 million, and if you're 6 months away from production, you might make $40 million. Then do the maths. It's easy. So we are getting some traction, and I think people are risk averse at the moment. So exploration is a very hard sell, but mining, especially small, fundable things, there is a niche out there for it.
Interesting. All right. Well, obviously, there's going to be some more news. There's going to be some stuff coming through. We'll be looking out for it. We'll be bringing it to you on the Resources Roadhouse. Andrew Radonjic, thanks for being here.
Great. Thanks again, Wally.
Cheers.